afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal, and these are the top stories this Thursday afternoon. Stock Street soft and ranged above a critical support zone, keeping the street on the edge. Utilities, capital goods eke out gains, while healthcare and realty drift lower.
Lakshmi Organic perks up ahead of its board meet for fundraise today. The stock is up 30% this month itself. Mastek surges on a strong fourth quarter with revenue growth outpacing large peers like TCS and Infosys in constant currency terms. Cyient gains ahead of its results later today as Midcap IT finds favor amongst investors. All right, those are the top headlines that we are tracking on Midcap Radar for you. Good afternoon for the markets. If we look at what's happening here, Nifty is down 20 points. The SGX Nifty today was indicating that, yes, the start could be in the green for our own markets, but we have fallen from those highs virtually at the day's low right now. While the mid-cap side of things, they are outperforming. The mid-cap index is up 23 points. So the mid-cap outperformance actually continues. And the Bank Nifty, that's the one which is also in the green right now, up around 37 points. But it's important to note that we have come off from the highs of the day. And we'll have to see whether in last 1 hour of trade, this momentum sustains or not, because it is weekly options expiry. So last 1 hour will be very critical. But it's all about mid-cap IT again, Reema. What a move on Mastek, right?
Absolutely. And this came as a complete surprise, right? I think most of the stocks are corrected post numbers. So when you come out and deliver a 5% organic revenue growth quarter on quarter, and you guide for growth to be above the industry next year, and an aspiration to improve the margins, I think it just took the street by surprise. And it's lifted a couple of the other IT names as well. So Cyient is moving up ahead of numbers. That's gained close to about 1.5%. Others in the broad technology basket like Nazara, RateGain, they're also up and about in trade. But let's, get to our segment, Midcap Movers. Vivek is here with that list. Vivek?
Well, thank you for that. What we're actually seeing today is that within a particular space or within a particular segment, most of the stocks that are listed are actually moving higher in tandem. So a couple of interesting segments, a couple of interesting spaces today. First, looking at innovative names, look at names like Lux Industries, Rupa and Company, Dollar Industry, Page Industries. All of these stocks are moving high in the session. In fact, some of them on very good volumes as well. Another packet of the market that's doing quite well is the entire footwear space. So Mirza International, now this particular stock has moved up almost 70% in the last 5 to 6 trading sessions. Also names like Bata, Relaxo, Metro Brands, Campus Activewear. One important trigger to watch out for in the entire space, is how is it that Red Tape gets listed, and at what valuation will that particular company come onto the bourses. Some stocks that are doing very well on strong volumes: Kirloskar Electric after a while, Shoppers Stop, Titagar Wagons, and initiating coverage report coming in here, helping the stock. Also marquee names have entered this particular name, and SML Isuzu after a while is doing very well in the session. On the other hand, what you're seeing a bit of profit booking across the pharma space. It's been an outperform in the last couple of weeks. However, names like Pyramid, Gland Pharma, Sequence Scientific, and Divi's, all of them seeing a bit of pressure or profit booking at higher levels.
Okay, all right. So a lot of mid-caps that continue to be in focus. We'll speak about a whole host of them on the show. But first up, let's take a technical check on the markets as well and welcome Dharmesh Shah at ICICI Direct, who's the head technicals at this particular firm. Dharmesh, good afternoon. Thank you so much for joining us. Well, it's the weekly options expiry. We've come off from the highs. What are the charts suggesting now?
Yeah, good afternoon, Sunal. Yes, definitely I think so. For last 2-3 trading sessions, we have been seeing a more of a trading range for the Nifty, where 17,800 has been acting as a strong resistance. We believe, I think so, this lackluster trading session should continue for some more trading days. As 17,500 remains to be the very strong support, we expect market to see a more of a consolidation in this range of 17,500 to 17,800. But eventually, we expect, I think so, market should be looking for higher targets for a couple of weeks, where we expect, I think so, 17,800 should get taken out, and we should be heading towards 18,100. This being a more of a positional view. As far as intraday view is concerned, we believe, I think so, 17,540, 560 on Nifty spot remains to be the very strong support, which we don't expect to breach. Eventually, in last 1.5 hours, we believe, I think so, we should see some bit of a momentum gaining back to the actions, where Nifty should be back to 17,640, 650. So buy the dip should be the strategy at the current.
Okay, what about individual stocks? What would you recommend for trade?
Okay, as far as trades are concerned, I think so in the mid caps and the small caps remains to be the flavor in the current momentum as seems to be more performing. Because if you look at the mid caps and the small cap indices, both has witnessed a falling channel breakout, indicating a more of an end of the corrective phase. As far as stocks are concerned, I think so we like pharma space as a whole. Index as a stock for pharma index, I think so the index has been into the corrective phase for last 18 months, and we have seen a more of a price-wise and tank-wise damage in the most of the pharma space. Going forward, we believe I think so the worst seems to be getting over for the pharma space. We expect the pharma to see a more of a gaining momentum going forward. But IPCA Labs among the pharma space remains to be our top pick. If we talk for IPCA again, the stock has retraced 80% of the post-COVID rally, and again the support to talk for the buying demand is emerging from the lower band of the channel. Again, if you look at the volumes for last 2 to 3 trading sessions, the volume seems to be picking up in IPCA. We expect the stock to head towards 950, which is again the November 2022 high, and a support. I would say for stop loss again, 765 remains to be the strong support for the stock. So IPCA remains to be a topic inside the pharma space. Apart from IPCA, we do like the financial space where Aditya Birla Capital, from the short-term perspective, the stock has seen a 4 months consolidation breakout. The stock has been trading in this range of 133 to 162, as has witnessed a breakout with a strong volume. So we believe I think the stock should see a continued momentum towards 176, keeping a stop loss of 154. So IPCA Labs and Aditya Birla Capital remains to be a top pick in current scenario.
Okay, all right, Dharmesh, thank you so much for joining us. So that's a technical check on the markets and some technical picks as well. For the markets, we remain steady and the mid-cap index continues to outperform, but we'll do one thing, we'll slip into a short break. And up next, we'll be joined by Sanjay Thakkar, who's the chairman at Landmark Cars, to discuss company's business outlook and the recent operational update that they just reported to the exchanges. Stay tuned for that.
Yes. Quiet! It's okay for us to nod for everything, because we are parrots. But your wealth manager? Shouldn't be doing that. You know? No? Oh.
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
I am heat.
Blue Star Inverter AC with fast cool technology. Bye-bye heat. Blue Star.
100% happiness with SBI Home Loans. Zero processing fee at 8.50% onwards. Apply today. Call 1-800-112018. Visit homeloans.sbi.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com.
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
पिछले 6 सालों से हर रोज यही हो रहा है। ये वो SIP है जो चौधरी साहब अपनी बेटी के लिए कर रहे हैं। जब जिंदगी जीने का तरीका ही SIP है, तो जिंदगी के लिए SIP क्यों ना हो?
An investor education initiative by HDFC Mutual Fund. म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
Welcome back. You're still tuned into Midcap Radar. Let's get to Landmark Cars, which is in focus on the back of their latest business update. The company closed FY23 with 36% growth in sales. Its after-sales business grew about 26%. To discuss more, Sanjay Thakkar, the chairman at Landmark Cars, is joining us now to discuss the current trends and the outlook going forward as well. Mr. Thakkar, good afternoon. Thank you so much for joining us. Well, it's been a good growth, 36% on a YOY basis. But you did mention in your press release that vehicle sales revenue was impacted by chip shortage and discontinuation of certain models. Had that not happened, what kind of revenue growth would you have seen? What amount of sales were impacted because of this scenario?
Yeah, quite a bit. Talking of, say, Mercedes-Benz, and what I'm telling you has already been in public domain for a while. The company, Mercedes-Benz as a brand, did some 15,800 units for the calendar year 2022. And at that time, some 7,000 unfulfilled orders were there. Just imagine what we are talking about. The company has also published their quarterly numbers right now, and they are at 4,600 odd units for the first quarter, with again a very large amount of back orders which are unfulfilled. So the whole of last year, and this is just one of the brands that I'm talking about, and a similar situation was there to some extent in most of the brands that we represent. So the last year was where the chip shortage was there. There was Ukraine war. There were logistics issues because of COVID shutdowns in Shanghai. And if it was not there, our growth would have been significantly higher than what we have reported. Now, how much more? I really don't know what to say to that.
Okay, fair enough, sir. But now that the situation is easing on the chip, supply shortage issue, what can FY24 growth look like for you? You're ending FY23 on a solid note, despite all the headwinds, 36% top line growth, 4,600 crore nearly in terms of sales. Could you give us an indication? What is the internal target for next year?
Yeah, so I wouldn't want to put a number to that right now, but what I can say is that now that the supply situation is getting better, the demand situation is on balance quite fair, and the after-sales business for us, which also you mentioned that there was a 25-26% growth, which is actually more than our last 8-9 year average. So this is something which is getting into a very solid base, and that compounding will happen. The average selling price of every vehicle that we sell has been also growing. So really, we'll be disappointed if we grow anything less than what we have already grown at.
Okay. So you are penciling in growth of around 36 to 40% in FY24 as well?
I'm not putting a number as of now to that, but I mean, you can do the math yourself and see where it will end up. And we haven't added the new launches of some of the brands that we represent. Those cars are yet to come. And the acquisitions that we will hopefully do during the year. So a lot of things which are in the pipeline. Many things will happen this year. It's likely to be a good year.
Can you tell us what are the acquisitions you're likely to do? What's the thinking on the M&A front?
So we will do acquisitions. We have, over a period of time, last 20 years, we have acquired dealerships when there is no fizz in the market, where we do it in a way that our payback is in 4, 5 or less than 4 years is when we get our monies back. So that's the focus going to be. We will put capital to use where the returns are predictable, certain. This industry is a little bit cyclic, and we have seen that happening. So we are in a good zone. So we will not mess it around. We will put money where the returns are, and the ROC is very good.
So, Mr. Thakkar, any kitty that you've set aside for such acquisitions that you are looking at in this year itself? Anything?
Yeah, the company has been generating good amount of free cash. We have also raised money from the IPO proceeds, which are all parked to repay our short-term debts. That's what we have done. So the opportunities are galore, whether we expand into the car care business, that's what we are going to be doing in a meaningful way, where our margins on the after-sales business will also hopefully show some growth. We will also double into the pre-owned car business, again, without adding to any kind of stock or losses. The pre-owned car business, as you may know, for the last several years was dominated by organizations which were focused more on GMV and less on profitability. And that is something that is now out of the way, hopefully forever. Landmark will be a decent player in the pre-owned car business also. So we have a lot of things happening at our end. All our senior guys are busy planning what to do, where to allocate manpower, resources. What I can also say is that in the last year, we have grown without adding to our outlets or to our manpower count. So the operating leverage is what we have kind of kicked in, and that's what we will be focusing on always.
Okay, so Mr. Thakkar, when you talk about focusing more on the other segment as well, so I just wanted to understand the split between new vehicle sales and used segment. What is it currently?
So right now, let's look at the figures from, say, America. In America, 30% of the used cars sold are by the new car dealers. In India, that number is 4%. At Landmark, we are not, as of now, any meaningful players. We have been kind of buying and immediately selling it out in the open market for some kind of a commission. Now, this number, maybe when I come to you next after our annual results are declared, I will may be able to put a number to what we are talking about. But we will make a foray into the used cars where we believe we have a natural edge. And now that GMV is not a matrix that people will be looking at. And Landmark has always been looking at profitability as something that should be driving the business.
So you will be making a foray into pre-owned or used cars in FY24, right? That's one of your plans for next year. How big is the pre-owned market? Could you give us the size of the industry? And also, what is the expected profitability? Since that's something that you've got a laser-sharp focus on profitability, what's the expected profitability on the used car segment for you that you anticipate? Two numbers, sir.
So the used car market is bigger than the new car market in number of unit terms. People have been focusing on the number of units sold as the size of the market, not the best of ways to measure something. What Landmark will be doing is that Landmark will be focusing on only the brands that they are representing. So what do we represent? We represent Mercedes-Benz, we represent Honda, we represent Volkswagen, we represent Jeep, we represent Renault, we represent BYD. So the brands that we represent, we will be meaningful players in the pre-owned cars sales of those brands only. We will not be wanting to buy any other brands that we don't represent, because we believe that there is a natural traffic that we get for customers who want these brands from us. And that's where we can add value. We have service histories, we can sell maintenance contracts.
Right.
So it's a natural fit that we are talking about.
Right.
We are not going to be doing anything more adventurous. There is enough on the plate.
And so profitability for you on pre-owned?
Yeah, so generally the pre-owned cars have 7-8% gross margin. That's the industry, what we have seen. And we will want to kind of see that we make those kind of margins or more in the business that we do. It will be early days, but I'm kind of sticking my neck out and say that we are going to be doing this now that the loss-making competition is out of the way.
Okay. All right. Mr. Thakkar, it was a pleasure speaking with you, sir. Thank you so much for joining us and giving us a sense as to what's happening in the industry, your expansion plans and the outlook going ahead as well. That's the word coming in from Landmark Cars. We'll slip into a short break now and get you more on markets and our special segment, Midcap Spotlight, on the other side. Stay tuned.
अभी तक मटेरियल आया नहीं? पैसे नहीं है, मटेरियल कैसे आएगा? अच्छा,
पैसे का आप भी टेंशन मत लो। यू ग्रो कैपिटल का ग्रो एक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
What if buildings could tell you how they could be more efficient?
I'm listening.
Well, with IBM, you can use software to help you connect and analyze data from heating and cooling to elevators to lights.
What if we use AI-driven insights to pinpoint inefficiency?
Yep, and act on it. Saving energy, money.
And emissions.
Yep, that's a big one. Now you've built something better for everyone. That's the sustainability solution IBM and a global real estate company created. What will you create? IBM, let's create.
Pull up the flicks and I take it on gear. Pull up the hands and I feel more beer. I dig it on. I sick it on. Take it on the roll and the show and the pull up the flicks and
Volkswagen Virtus, German engineered for unmatched safety.
कमाल की कार है ना, अभी ले लें क्या?
सर, कमाल की कार के लिए कमाल का पेट्रोल भी चाहिए, एकदम टॉप का, जो हमारे इंडिया में मिलता कहाँ है?
अरे सर, पर इंडियन ऑयल पे मिलता है। प्रीमियम कार्स के लिए इंडियन ऑयल ने बनाया है 100 ऑक्टेन वाला देश का सबसे प्रीमियम पेट्रोल XP 100।
वाह, इंडियन ऑयल की बात ही कुछ और है।
इंडियन ऑयल, पहले इंडियन फिर ऑयल।
The colors of an Italian summer. Brought to you by Zodiac, finest quality clothing.
Welcome back. In our Midcap Spotlight segment today, we've got Surbhi joining in, and she's going to be telling us how Angel One and ICICI Securities fared in the fourth quarter. We know ICICI Securities is disappointed. The stock is under pressure, 4.5%. But earlier, when Angel reported their numbers, they looked pretty robust. So how do the two compare? What's the big reason for the differentiation? Surbhi joins in with the key takeaways. Surbhi.
It's been a tough year in the capital markets given the volatility we've seen this year. Now, amongst this, the two listed brokerages, Angel One and ICICI Securities, who have reported their Q4 numbers, Angel One has seemed to outperform. And I'll tell you a few reasons why. When you look at their active client market share over the last 2 years, both of them were at similar levels in March 2021, which was around 8%. But as of March 2023, Angel One has gone up to 13% and ICICI Securities market share has gone down to 7%. When it comes to their average daily turnovers, both of them were weak in their cash segment, but for Angel One, the growth in the F&O segment was much higher at 28% sequentially, whereas ICICI Securities, it was around 20%. The revenue trend for both the companies are also quite diverging. Angel One's revenue grew at 10% sequentially, while ICICI was flat. Angel One's broking revenue was also much higher at 18% due to higher share of F&O segment, which is more margin accretive. It seems like Angel One's superior customer engagement metrics and tech capabilities puts them on a stronger footing. However, the strong presence in an F&O segment could be a key risk going forward. While even though ICICI Securities' revenue is diversified, weak trends in digital customer acquisition and market share loss remains a key concern. When it comes to valuation, both are currently trading at similar levels at 12 to 13 times FY23 PE.
Surbhi, thank you so much for joining us with that comparison. Moving on, let's focus on the soda ash space, because I did tell you on Monday that Tata Chemicals cut soda ash prices by 3 to 4% in India this week. Largely, this also indicated that there could be some demand concerns, and with more supply coming in, there could be more pressure on soda ash prices as well. But Nirmal Bang, in its recent note, indicated that there is not so much worry as far as demand is concerned, and they did say that the price cuts this time around were not as steep as the ones that we saw in November 2022. Their channel checks suggested that this price cut was largely because raw material prices had come down, and this had to be passed on to customers as well. There is no adverse impact of reduced demand yet, is what Nirmal Bang is saying. Yes, in the second half of calendar year 2022, there was weaker demand from Chinese markets, especially from the autos and construction sectors. That's where soda ash is used. But it is expected to revive with the revival that we'll see in the real estate industry in the second half of calendar year 2023 in the Chinese markets. Additionally, we're talking about this big push towards renewables. Soda ash is also used in solar panels, and increasing capacity in solar panels across the globe is something that will increase soda ash demand as well. China particularly is planning to increase or add 100 gigawatt of solar power capacity per annum from calendar year 2023, and this is something that will aid prices and demand for soda ash as well. Already higher solar power addition boosted the pricing in Chinese markets, and this is something that they expect to continue. So yes, they are trying to say that the demand concerns were overdone, and that is not something that they'll see in the overall industry, so it should not be such a big impact on Tata Chemicals as well. Clarifying it and putting it out because we did see a major reaction on Tata Chemicals in last couple of days as well. So that's all the mid-caps that we have on our radar. But for now, we'll take your leave on this edition of Mid-Cap Radar. Stay tuned. Mutual Fund Corner when we return.